Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right, my name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And man, if that intro doesn't hype you up, I don't know what will. At least it hypes me up. I want to come out like I'm, Tyson or Holyfield, and I'm in a big boxing match. That shows you how old I am, right? My boxing references are Mike Tyson and Evander Holyfield. Man, those two guys were warriors. And ear biting aside, those were some battles. But anyway, guys, my name is Mark-eitel. You're listening to the Mr. Mortgage Show. We do this each week right here, same time, same station. And you're in the right place if you've got questions about real estate, about mortgages, interest rate, the Federal Reserve. Where are housing prices going? Is it a good time to buy? Is it a good time to sell? Should I do a cash-out refi and pay off all my debt? Or should I just dig a hole in the backyard, stick my head in the sand, and wait for all this to pass? Guys, you're in the right place if you want the data, the information, the tips, the tricks, the strategies that you need so you can go out there and make better real estate and mortgage decisions for you and your family. Again, my name is Mark-eitel. This is the Mr. Mortgage Show, and I am joined, as always, by my lovely producer, Jen. She is womanning the Anytime Hotline. And if you've got questions or comments and you want them on the air, call or text that hotline. That number is 855-462-7292. That's 855-462-7292. Jen will get your questions on the air. If you prefer to do it via email, just go to mrmortgageradio.com. That's mrmortgageradio.com. Scroll all the way to the bottom of the page, and there's an email icon. If you click on that icon, you can shoot us an email, and she'll read your questions on the air for you. But man, oh man, I'm super excited. We've got a great show lined up for you this week. There was some key economic data released this week that had an impact on interest rates and kind of gave us a peek into the future with builder sentiment. And we're going to dig into all that this week. So let's just jump right in, right? So I mentioned builder sentiment. The builder sentiment is up for the first time in a year. And part of that is due to the increased activity in the purchase market. And that is believed to be a byproduct of the interest rates pulling back a bit. But let's put a pin in that. I'll get to that in a minute. But the other part of builder sentiment increasing is the supply chain issues that they suffered during the pandemic, and then the difficulty in getting product during the building boom of that pandemic housing melee, if you will, that we all just lived through for the last couple years. That all seems to be cooling off. Lumber prices have come back down, and they're feeling better about the ability to, one, get the product that they need, the materials that they need, but two, being able to build at a profit. So I know there are headlines right now that are circulating talking about builders reducing prices and giving significant concessions, right? Buying the interest rate down, upgraded kitchens, this is a great time to put pressure on the builder if you're trying to buy a house. But don't forget, guys, that a lot of the cost associated with building that house is 6, 8, 10 months old, right? They paid the premiums for all of those materials. So if the costs of the materials come back down, they feel like there's more flexibility in the market moving forward. So I thought that was encouraging. And then I mentioned the economic data. The wholesale price index came in lower, 0.5%, which was a bigger drop than anyone had anticipated, or at least the big brains on Wall Street. So the market reacted really positively to that. And the reason that number is important is the theory is if the people we buy things from, right, the manufacturers and the distributors, are paying less for the products and the materials that they buy to resell or assemble or build something out of and then resell to us, if those numbers are coming back down, then the price that we pay for things should also come back down. But if you're skeptical like me, it doesn't ever seem to come back down at the pace that it went up. But nonetheless, that was a positive report. The market reacted really well to that on Wednesday. And then there was a holiday spending report released, which I find super fascinating because holiday spending, and they take a period of time between November and then obviously the big Christmas buying season. So it's a November, December data set that they're looking at. and the year-over-year increase was 5.3%. Well, on the surface, that sounds like, the spending is growing. People feel good. They spent more on Christmas this year than last. Aha, here's the caveat. As a default, inflation makes everything cost more. So we bought less stuff, right? Because inflation is higher than 5.3%. So let's just use round numbers. If inflation is 6% and we spent 5% more than we did last year, that means we bought less stuff. Because if we bought the exact same amount of things, we would have spent 6% more than we did last year. So that's where, once they dissected the data, spending was actually down. I believe it was 1.1%. I will publish that article to the Facebook page so you can read it for yourself. And if you want to check out any of the data that we referenced during any of the shows, just go to mrmortgageradio.com. And I always put it on the Facebook page. That's just the easiest place for me to put it. And you're always welcome to interact with us on that page. But go to mrmortgageradio.com and scroll down to the Facebook page. So because of that data, it's demonstrating the significance of the pressure that the consumer's feeling. Couple that with, I think it was 60,000 tech jobs this year that were lost. Microsoft, Salesforce. You see the headlines each week, another tech company seems to be laying people off. So there's definitely economic uncertainty moving forward. The good news for all of us in this real estate space is that real estate traditionally performs very well during a recession. And then real estate is always a great hedge against inflation. And anybody who bought their property 2 years ago with a 3.5% interest rate, or who knows, some people were getting ones and twos. We were closing 30-year money in the twos and a couple of 15-year transactions in the ones. So crazy interest rates there recently. But nonetheless, if you were one of those lucky people who bought your property or refinanced your property during those times, you know how significant that decision was, because while everybody else is experiencing all of these rent increases, which have also eased a bit, we're going to talk about the significance of that during this week's show, because that's a key thing to watch. But my point is, with a 30 or 15-year fixed rate mortgage, your housing payment didn't increase. And it might have increased a little bit if your taxes went up or your insurance went up, but not significant jumps like the rental market was seeing. So it's a great hedge against inflation and always has been. So housing still seems to be supported at these levels. Builders are feeling better. And guys, you hear me say it all the time, supply and demand is the only thing that controls prices, not the cost of money. The cost of money will slow demand, but until there's more supply than demand, there's no indication that we're going to have a significant downturn in real estate. Now, guys, that's not to say some markets aren't experiencing lower prices. I talk to agents and homeowners nationwide every week. I'm blessed to have this platform. And I've talked to people who have seen 10 to 12% increase year over year. And I've talked to people who are seeing, a 3 or a 4% decrease in prices year over year. So that's another interesting thing about the real estate market is it performs differently in each region. It's not as simple as saying, there's this Xbox for sale at Walmart or Best Buy or Joe's Electronics, and it's the same price everywhere. Housing always performs differently in each market because of all of the local influences. But we're going to cover all that and get to your questions during this week's show. But you hear the music, you know what that means? That's my cue. We'll be back in a few. Sit tight during this short commercial break. On the other side, we'll be back with more of the Mr. Mortgage Show. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And you heard the man. You can get your questions on the air by calling or texting. He always forgets to say that. And I'm not going to remind him because he's as big as his voice sounds. I'm not slapping him around. I might send Jen in there to square him away, but I'm not doing it. But anyway, call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. Or if you prefer to send your questions via email, just shoot them to us. Go to mrmortgageradio.com. Scroll all the way to the bottom of the page. There's an email icon. If you click on that, you can shoot Jen your questions that way. mrmortgageradio.com. And to open the show, I went off on a bit of a rant. There were lots of headlines laying around here on my desk from this week, and I wanted to cover them all. But what I forgot to do was check in with Jen. Hey, Jen, how are you doing? Did you have a great week?
I had a great week, Mark. Thanks for asking. How was your week?
Hey, my week was awesome. I really did have a good week. We helped some families that didn't think they had a shot, and they closed this week. And yeah, that's always a great feeling. I mean, knowing the difference that homeownership is going to make in their life. But anyway, I don't want to go down that rabbit trail and get all philosophical, but I did have a great week. However, this is always my favorite time of the week. I enjoy spending some time with you here in the studio and the folks on the air. So yeah, let's jump right into the questions. I know you mentioned during the break that we had some already there queued up. So what do you have?
Mary is asking, I've heard you talk about buying a duplex and renting out the other side. Can I do this even if I haven't owned rental property before? I'm a first-time buyer. Thanks for your help.
Hey, Mary, that's a great question. And yes, you can. You can actually use an FHA loan as a first-time buyer and buy a duplex or triplex or even a fourplex with 3.5% down. And if that's the path you're going to take, man, oh man, what an amazing opportunity to buy we call it a multi-door, right? But a multi-unit property right out of the box and let somebody else, in the case of a fourplex, I've seen people live for free, right? Because they're collecting rent on those other 3 units. So yes, to answer your question, you can. And I know a lot of people get wrapped around the axle with that because they think that it's an investment property, right? And it is, right? You're renting out the other unit in the case of your example with a duplex, or in the case of some of the other clients I'm thinking of who bought fourplexes, it is a investment property, but because you're going to occupy that one unit as your primary residence, the whole property is treated as a primary residence. So you can qualify with as little as 3.5% down. So there are some moving parts around it. There's what's called an income stress test on the property when you get into the fourplexes. And I'm happy to walk you through it if you want to have a deeper conversation. But to answer your question, yes, as a first-time home buyer, you can buy a duplex, rent out one half, live in the other as your primary residence, and supplement your income with that rental income. And I have seen it done with a fourplex where you end up living for free, essentially, assuming everybody continues to make that rental payment, right? Because that's not guaranteed. either. We all know the horror stories, but if you get good tenants in there, it can be an amazing opportunity. And I have to commend you for coming out of the box with this strategy, because a lot of people don't understand the power of real estate as an investment. We all understand the long-term wealth gain from appreciation, right? And that's a capital gain. The asset that you buy grows in value over time. But with an investment property, you're also benefiting from that cash flow, which is an entirely different strategy. So you can have a capital gain. You can buy something for $5 and sell it later for $10, and you've made $5. Or you can buy something for $5 and later sell it for $10, but along the path collect, 50 cents a year on that example, and make additional money in the form of cash flow. And that's a powerful tool, because think about this for a minute. In Mary's example, she's going to put, if she goes the FHA route, 3.5% down and leverage the property with a 96.5% loan. But she's going to benefit from 100% of the positive cash flow. It's not like she's got a partner who's taking 96.5% of the cash flow. I mean, she does have to pay the mortgage, don't get me wrong, but all the positive cash is hers. All of the benefits of ownership are hers, and all of the appreciation is hers, and she controlled that asset with 3.5% down. So guys, if you ever wonder why I get passionate about real estate and the difference it can make in people's lives, this is a perfect example. Buying a property makes sense in so many ways, but here Mary is industrious enough to jump into a first-time homebuyer circumstance and looking at a duplex where she can generate some income and have a primary residence to live in. But guys, I'm not going to go too far down that path unless you want me to. And if you have questions or comments along those lines, just shoot us a text or give us a call at 855-462-7292. And I'll be happy to talk about that at length, because it's a passion of mine. But anyway, let's throw it over to Jen for another question.
Carl sent this one. I'm selling my deceased mother's house. It needs a new roof, and the buyer is telling me at the last minute that the mortgage company won't close until it's replaced. Does this sound right? I already discounted the price so they can hire a roofer. I'm not sure if there's anything we can do, but I'd figure I'd ask.
Yeah, Carl, that's a great question. So there's a lot of moving parts around that I'm going to need a little more information, but on the surface, it's not out of the ordinary that the lender's going to push back on that. And it's more of a byproduct that the insurance company won't insure the property because of the age of the roof. And because of the age of the roof, the insurance company wants the new roof and the lender wants the property fully insured. Now, there is a strategy that involves a builder's risk policy on the property so that you can get the new roof in place before the homeowner's policy goes into effect, from the standpoint that the builder's risk policy will pay claims during that quote-unquote construction period. But again, there's a lot of moving parts. You're going to have to run it by your underwriter. I'm happy to dive deep with you on this one. We've seen it work where a builder's risk policy in front of a homeowner's policy can make a difference and can get the property done. But this one requires a deeper conversation. But on the surface, yes. And it's not uncommon that there's going to be a difficulty closing this because the property is likely uninsurable because of the age of the roof. And I need to know, are there structural issues? Is the roof leaking? There's a lot around this. But if you want to call me off the air, we can have a lengthy conversation, and I'll help you any way that I can. There might be a way to salvage this one. But sadly, everybody involved should have known this was going to be an issue up front. It's not uncommon. And there are ways around it. In some instances, you can escrow the replacement cost of the roof, but that could also be an issue if the value is higher than a certain percentage of the loan amount or purchase price. Some of the loan programs have limits how much the seller can escrow for repairs. Again, a lot of moving parts around this one. I would encourage a conversation off the air. 855-462-7292 is the best way to reach me, and I'll spend some time and see if we can't figure this one out for you. But great question. I certainly appreciate it. Guys, you hear the music? You know what that means? That is my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be back with more of the show. Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did, business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are tuned into the Mr. Mortgage Show. And guys, we do this each week right here, same time, same station, and it is always our goal to give you the information and the tips, the tricks, the strategies, the answers to your questions so you can go out there and make better real estate and mortgage decisions for you and your family. And as always, I'm joined by Jen, my producer, and she'll get your questions on the air. You can call or text. The announcer always forgets that. I got to go in there and slap Ike around a little bit. No. Ike always forgets to mention that you can always text that number as well. And that's 855-462-7292. 855-462-7292. Call or text your questions and Jen will get you on the air. Also, too, if you prefer to do it via email, just scroll all the way down to the bottom of the page when you go to mrmortgageradio.com. That's mrmortgageradio.com. There's a little email icon. If you click on that, you can shoot Jen your questions via email. And hey, before the break, Carl shot us a brilliant question regarding trying to close on a property that needs a new roof. And at the last minute, the mortgage company's telling the buyer, no, this isn't going to happen. I've got some ideas for you involving that stacked insurance policy strategy. We talked a little bit about it before the break, but Carl, I got your email and we are going to connect when I get off the air because I think I might be able to help you work around that one. And guys, if you ever miss any of the show and you want to double back or you think someone else you know could have benefited from hearing some of this, you can always find the podcast, which is a recorded version of the radio show, at mrmortgageradio.com. Just click that very top link. It'll take you to the podcast page. And I know there are over 100 episodes up there already. So lots of good stuff and a little bit of me mixed in with it. So anyway, you hear me talking about Jen all the time. She is my sidekick, my producer. She is womanning the Anytime Hotline. She'll get your questions on the air. And I know we've got some questions waiting. So let me throw it over to Jen right now. Hey, Jen, what do we have?
Frank sent a text. What does it mean when a condo is non-warrantable? I know it needs a bigger down payment, but is there other issues I need to consider? Thank you.
Oh, sorry about that. Hey, hey, Frank, that's a great question. Yeah, so I would be curious to know why it's not warrantable. That would be my biggest. I'd want to make sure they're the red flags that are causing that or something that you're comfortable with. And for any of the listeners out there that don't know what Frank and I are talking about, a warrantable condo is a condo where the association has provided the necessary information to the underwriter and the underwriter has signed off that the management of this condo is in good order. There are no deferred maintenance issues that are going to cause a problem. The budget is in good order. There are reserves necessary for any upcoming expenses. Now, here's the caveat. If it's non-warrantable, that means there's a deficiency somewhere. Is it in the reserves? Is there a lawsuit pending against the association? Is there a large number of units owned by one investor who rents them out? These are all things that are evaluated in that quote-unquote questionnaire. Now, since that Surfside condo collapse down in Dade County, Florida, the questionnaire is being scrutinized more around the deferred maintenance issues. And some association members are hesitant to provide the information because they don't want to expose themselves to litigation. And we're seeing this happen in the Florida market. There are tons of condos in the Florida market. Now, if it's non-warrantable, you're right, Frank. You can put a larger down payment down and buy that property. And the reason they require that larger down payment is they're offsetting some of that risk. And typically a non-warrantable condo is going to require a 25% down payment. But to answer your question, my concerns would be, why did it fail the questionnaire? What deficiencies are in there? And we've seen, I don't even want to get into it because it's a whole show in and of itself. And I know there are attorneys that just talk about condo associations on the air. But you got to think about it this way. Most associations are run by the residents, and most of the residents have the major concern of theirs has been keeping the dues low. So keeping those association dues low has resulted in shortcomings for a new roof, for some structural issues, for the parking lot being repaved, for the pool that needs to be resurfaced. And the only way around that is to issue assessments for everybody. So your dues go up. There's big assessments in some of these properties. So most of the non-warrantable issues that I'm seeing are around the budget. Some deferred maintenance issues are popping up, but mainly it's around the budget, because if the budget's in good health, the money's there to take care of the maintenance issues. So that's what I would want to dig into. I would want to look at why this didn't pass the questionnaire for warrantable versus non-warrantable. And guys, all that means is that if it's a warrantable condo, that the questionnaire was satisfactory, and there are a variety of loan programs that are available on that. Not all loan programs, because FHA has its own approval process for condos, but you could buy that property with 3% or 5% down with a conventional loan, assuming that it's quote unquote warrantable. But man, brilliant question. Thanks for that, Frank. You guys are bringing some great questions between the last two about trying to close property with a leaky roof and now non-warrantable condos. Yeah, I really, really appreciate that question. That was a good one. Hey, Jen, do you have another one ready?
Rachel has this question. I'm getting ready to sell my house, but really want to find and buy my new place first. My agent is suggesting a bridge loan or a HELOC. Which is better for this situation? I'm in Sarasota, Florida. Can you help us with this? We appreciate your show.
Hey, that is another great question. And to answer the second part of it, yes, we can help you in Sarasota. Actually, if you're hearing my voice, we can help you. We're expanding our footprint everywhere that the radio show is being broadcast. So super excited about what's going on here in the Mr. Mortgage family and with the team behind the scenes as we continue to grow the company. But yes, we can certainly help you in Sarasota. But to answer your question, so HELOC versus bridge loan. Okay, I'm going to go through this real quick because there's pros and cons to both. The HELOC is most likely going to have a early termination fee if you close it out quickly, right? If you borrow the money for the down payment on the new property and then turn around and sell your home, they might hit you for an early termination fee, because HELOCs usually don't have a lot of front fees, and that's how the lender protects themselves. The bridge loan strategy is super interesting. You're usually going to want to originate the bridge loan with the same company. Well, I say usually, it's almost always the same company that's going to do the mortgage on the new property for you. Now, with either one of these strategies, you need to be able to service the debt on your current property, on the bridge or HELOC loan, as well as the new mortgage. So you're going to have 3 loans that you need to have adequate income to service. You're going to have to meet the quote unquote DTI, debt to income requirements, but now carrying 3 loans instead of 1. Another strategy that we've seen work really, really well. Now, I know a lot of people are nervous. They don't want to sell their house and then go out there, and their fear is they're not going to find what they're looking for, and then they're going to be forced into a rental. You can do what's called post-closing occupancy. So you could put a sign in your yard, sell your property, and the buyer can let you stay in the property for, if they're buying it as their primary residence, they could give you 2 months. It's actually 59 days, right? 59 days post-closing occupancy to relocate to your new property. So that would give you, in theory, around 90 days if you get or if you negotiated your sale. Let's say you did a 45-day close on your sale, and then 2 months post-occupancy. You have 3.5 months to make that transition into the new property. And if you have questions around that, I'm happy to help, happy to dive deeper. But I would consider that as an option too, because that doesn't involve any additional debt and might be the easier way to do this. So brilliant question. I appreciate that one. Post-closing occupancy may be the way to go, and I'll be happy to walk you through it if you need more info. But guys, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the show. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And we do this each week right here. Same time, same station. I am joined, as always, by Jen, my lovely producer, who is womanning the Anytime Hotline, 855-462-7292. That's 855-462-7292. You can call or text your questions or comments to that number, 855-462-7292. 7292, or check out MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll all the way to the bottom of the page, and on the bottom of the page is an email icon. If you click that, you can send her your questions via email. But speaking of your questions, I know we've got some stacked up because I have been rambling, and I'm not even a rambling, gambling man. Let's throw it over to Jen and try to get through some of your questions. Hey, Jen, what do we have?
This is from Grace. I keep seeing people say, marry the house, date the rate on Instagram. It makes sense on the surface, but if values go down, won't refinancing be a problem?
Yes, Grace, it will be a problem. And that's why I hate that saying, marry the house, date the rate. That was something that grew legs over the summer when everybody was trying to come up with some way to offset the interest rate reluctance people were having about moving forward with the property. So they were saying, you fall in love with the house, it's your forever house, you can refinance when rates come back down. Here's the thing. What if rates don't come back down? You've heard me advocate for the buy down strategy, and we're using it every day. We just closed a property yesterday in PSL in the fives, and the seller paid for the interest rate buy down. Well, here's the cool thing. They may never have to refinance that rate. What if rates never go below 5 again? And you've done that whole marry this and date that strategy. And to Grace's point, what if property values pull back and there is no option for you to refinance? Now you're married to that rate and to that house. So you might as well get the better rate up front if you can by using one of the buy down strategies. And the 3-2-1 buy down strategy, which is super popular right now, if the interest rate of the day is 6.5%, to use a round number, and the 3-2-1 buy down, your first year, your rate would be 3.5%, your second 4.5%, your third 5.5%, and then 6.5% for the remainder of the loan. That sounds super sexy, right? Start rate of 3.5%. I don't like that as much as the permanent buy down, because if it was me, and I've lived through the housing crash of the early 2000s, I've been doing this since 99, I don't want to worry about resetting at 6.5% if there's never that opportunity to refi. Or to Grace's point, what if property values decline a bit and I don't have the necessary equity to refinance? What I prefer is buying that rate down from 6.5 to 5.5 or 5.25, and having that for the entire life of the loan. And yeah, if rates fall into the 4s or 3s, I can address refining then, but I've already set myself up to win. And if housing values go down and I can't refi, I'm with that 5.5 or 5.25 or whatever I bought the rate down to. So yeah, Grace, that's a brilliant observation. And to your point, that marry date strategy won't work if housing prices decline to a point that you no longer have enough equity to refi. So anyway, brilliant question. Great observation. I'm not a fan of those catchphrases, although I do see the value in capitalizing on a refi later if rates come down. I just don't like banking on the uncertainty of the future. But thanks for that question. That was a good one. Hey, Jen, do we have another one?
Steve sent this text. Is there a maximum amount we can gift our son when helping him buy his first house? We are trying to keep his payment low, and it's going to take a pretty big gift.
So that's a great question. And there are some specific loan programs that might limit how much the gift can be, but traditionally, no. And if you were to exceed that, you could be a non-occupying co-borrower if it was necessary. Where you hear the 3%, the 6% and 9% limits are usually on seller contributions for closing costs and for rate buy downs. But if you're a parent gifting your child the down payment, or you're trying to gift equity in a property that you already own, there's typically not a max. And if there is, then you could go the non-occupying co-borrower route to work around that. But man, brilliant question, and congratulations on being in the position to help your son become a homeowner, because we all know the value of that over time. So brilliant question and brilliant strategy. Hey, Jen, can we squeeze in another one?
Shelley is asking, I just bought my house a few months ago. Is it too soon to get an equity line? I'd like to access my equity in case values go down.
Wow, guys, I'm seeing a trend or hearing a trend in the questions this week. There are some people trying to prepare for a declining housing value, which, hey, right, that's a brilliant strategy. If you have a workaround, you might as well put it in place just in case, right? You heard me last week talk about the equity line. Take it now, put it on the shelf. It's there if you need it. But hey, in a declining market, your equity line could be reduced also because it's based on the equity of the property. But we talked about that last week, just taking it, having it in case you need it, because when you need it, you might not be able to qualify for it. I think in the case of last week, we talked about what happens if you lose your job or you're now credit challenged and you no longer qualify for the equity line. But anyway, I'm getting off topic. Brilliant question. There is no waiting period. Sometimes you can close simultaneously. You can close the equity line at the same time that you close your primary, but you can walk into the bank or the lender of your choice and apply for that equity line right now. There is not a waiting period. Just know, though, as I mentioned, if property values decline and your equity line is based on just that equity, so just know this, the equity line can be reduced if housing values go down, because it is just that. It's an equity line based on the amount of equity that you have in the property. I just want you to be aware of that. But brilliant strategy, have it there. We talked about it last week, just in case you need it. So great question. I hope that helps. If you need more information about that, or you want to have a deeper conversation, or if you want me to refer you to a local bank that can help with the equity line, I'm happy to do that. Just give us a call or shoot us a text to 855-462-7292. That's 855-462-7292. Or check out MrMortgageRadio.com. All my contact info is there, MrMortgageRadio.com. But guys, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be back with more of your questions and more of the data. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is mark-eitel, and you are still listening to the Mr. Mortgage Show, and we thank you for that. It is my favorite time of the week. I feel blessed to be part of your day. Thanks for spending a little bit of it with us. I am joined, as always, by Jen, my producer, and she is womanning the Anytime Hotline. That number is 855-462-7292. You can call or text 855-462-7292. Get your questions or comments on the air. One more time for the kids in the back. That number is 855-462-7292. Or if you prefer to shoot us an email, just go to MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll all the way to the bottom, hit that little email icon, and she'll get your questions via email that way. So, man, oh man, super excited. We've had some really, really good questions this week. I know we've got some stacked up over there, so I'm going to throw it over to Jen right now and see if we can't work through this backlog of questions. What do we have, Jen?
Renee sent this email. We're getting our house ready to sell on our own, no realtor. I was listening to your podcast. I think you talked about a value report that you can run. Is this still available? If it is, how does it work? And thanks in advance.
Hey, Renee, thank you for that question. And man, oh man, thanks for being a podcast listener. I'm super excited when I hear that people are checking us out online. And guys, every week after we broadcast the show, Jen takes a recorded version of it and posts it up to the podcast page as an episode. So you can go to mrmortgageradio.com and that top link will take you to the podcast library. And every now and again, I'll do some bonus content. I'll jump on with a daily dose and talk about something that, is specific to a program or usually what happens is during the week, I'll get a few questions that are super similar and I'll jump on and do a quick hit, if you will, and do a daily dose episode. So I think there are over 100 episodes up there now. I'm not sure. I haven't been in to see the library in a while, but man, I make that sound like a presidential library. Wait a minute. I don't want to, never mind. Forget I said that. The podcast library. But anyway, yeah, check out mrmortgageradio.com if you too want to listen to the podcast. And hey, while I'm thinking about that, I'm going to ask you for a favor. If you're a listener of the show, I'm hoping I can count on you to help me spread the word. If you've got any friends or family or coworkers who are out there thinking of buying or selling real estate or talking about refinancing and wondering if any of this is if it's still a good time, does it make sense? I would love the opportunity to talk with them, and I'm hoping I can count on you to make that intro. And you can do that by just sharing the link, mrmortgageradio.com. All my contact info is there. And man, I would love to help anybody that we can. And guys, if you can hear this show, then we can be your go-to mortgage company. We're expanding our footprint. Everywhere the show goes, so goes the team. So we're super excited about that. But anyway, let me back all the way up and answer Renee's question if I can remember it, because I've been rambling. So you're getting ready to sell your house on your own, and you heard me talking about that value report. So go to mrmortgageradio.com. There's a link that says free value report. I believe the direct website is freevaluereport.org, freevaluereport.org, but we linked it up at mrmortgageradio.com. And I just need the property address, everything, the full property address, including zip code, and then an email address to send you back that report. And it's a tool that we use almost every day. We'll use it to evaluate a property just to get a quick look at a value before we order an appraisal. And it's not a full-blown appraisal. I don't want you to think that it is, but it's way more accurate than one of those online, you know what I'm talking about. It's a pretty robust report. I think there's, usually around 8 or 10 pages to it, but I'm happy to run that for you. We'll shoot it back to you via email. And anybody out there who's in that boat, who knows, you're thinking about changing the value of your insurance policy, or you're considering refinancing and wondering what your property's worth today, or who knows, maybe you're just curious. Where are property values going? Has it affected my property? Everybody's welcome to use that freevaluereport.org, or just go to mrmortgageradio.com and we'll shoot that report back to you. But brilliant question, and thank you for it. And thank you so much for being a listener of the show. Anyway, Jen, do we have another question?
Perry sent this email. I just want to say thanks. From start to finish, your team was awesome. We closed last week and couldn't be happier. Thanks again. Ooh, thank you, Perry.
Yeah, thanks for that, Perry. Jen, do you remember them? Yeah, awesome people, right? Super, super cool people. Man, thank you for letting us be a part of your journey. You guys are amazing. The family is awesome. I'm super excited for you. You're very welcome. And I want to say thank you for letting us be your mortgage team. We're super excited to be a part of it. So anyway, while I'm thinking about it, I'm going to use you as an example, Perry. So Perry and his family had this beautiful home, right? But it was a townhouse. Some people call it a row house, a carriage house, and in a beautiful neighborhood, beautiful home. But it wasn't the home that their forever home. It wasn't their ideal, perfect home. They wanted to change school districts for the kids, and they've got young children. Anyway, long story short, if they hadn't have bought that row house, if they hadn't have made that compromise earlier in their life, they would not have had the equity necessary to go buy this big, beautiful house. So long story short, what they did, they compromised as a couple earlier in life, and they bought this, I think it was only a few years ago, 3 or 4 years ago, if I remember correctly. Shoot me back a text or email, Perry, if I'm getting the story wrong. But anyway, they built up significant equity in this townhouse, and they were able to sell the property, and we did a simultaneous close, meaning they closed on their sale and their purchase the same day. The title company just wired the funds over to the second title company. They moved a couple counties away. But they got the school district they wanted, a brand new house, big house, 4 bedrooms, 3 baths, big yard. And it's the dream house in the right area that they want to raise their family. And my point in all of this is, if they had been stubborn and just said, we can't afford what we want, we're going to wait, guess what, guys? They would have never been able to afford what they really wanted. And instead, they bought what they could afford. And it was a beautiful home in a beautiful neighborhood, don't get me wrong. It just wasn't their ideal, so they compromised. But with that equity, they had enough money to put down 20% on the big house, air quoting the big house here, and throw a nice lump of money in the bank. So that kind of stuff gets me juiced, because that's the power of real estate and the power of making those proactive decisions. So anyway, I didn't mean to get sidetracked on it. Perry, I hope you don't mind me telling your story, but it is super motivational and I'm excited for you. So thank you so much for that comment. Hey, Jen, do we have more questions?
Laura has a question. Last week you mentioned a few websites for foreclosure auctions. Are there similar sites for tax deed auctions?
Hey, Laura, that's a great question. Usually there are some websites that most of the counties are using, but I would Google your local county and then tax deed auction. And most of the time it takes you to your local tax assessor's website. And from there, it'll link out to the online company that's hosting or facilitating the auction. So, and guys, tax deed auctions happen after the tax certificates have been sold. So if you're not paying your taxes, typically you can skate for 3 years. I think it's in June, they auction the tax certificate. So let's say you owe $2,000 in taxes. Well, in June, if you hadn't paid those taxes by June, I believe it's June. I think it's June in Florida at least. They'll auction that certificate off. And the way a tax certificate auction works is they start at the highest possible interest rate, and I believe it's 18%. It's been a while since I've been involved in tax deeds and tax certificates, but I did play around with them after the housing crash a while back. But nonetheless, they start bidding the interest rate down. And basically what happens is somebody's paying your taxes for you, and then whatever interest rate they win that certificate at, you're now responsible to pay them that principal amount, what they paid for your taxes, and then that interest. And it usually takes 3 years of unpaid taxes to force a foreclosure. Now, if there's other derogatory stuff happening, the foreclosure might happen sooner. But once those tax certificates foreclose, then there's a tax deed auction or tax deed foreclosure auction. And that is a full-blown foreclosure auction. That property goes to the highest bidder, and the tax certificates get paid at whatever interest rate each of those certificates were won at during the certificate auction. So anyway, that's how that whole buying property for back taxes work. It's not as simple as just paying somebody's taxes and now you own their property. There's a lot more to it. I'm happy to discuss it with anybody if you want to dive deep on it. But yeah, typically that's going to be linked through your county tax assessor's website. I would encourage you to Google your local county and then tax deed auction, and I think what you're looking for will pop up. And I hope that answered your question, and I tried to explain the process for everybody else. But brilliant question. Uh-oh, you hear the music? You know what that means? My goodness, where has the week gone? We have wrapped up another episode of the Mr. Mortgage Show. Man, oh man, time flies when we're all together on the air. I certainly enjoy doing this. I certainly enjoy having Jen, my sidekick, in the studio. Hey, Jen, you want to say bye to the folks?
Bye, Jen. Have a wonderful week.
Have a wonderful week indeed. Guys, if you need us during the week, just call 855-462-7292, or as always, MrMortgageRadio.com. That's MrMortgageRadio.com. Have a fantastic week. We will see you right here next week, same time, same station.
That's a wrap. Join Mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
Hey, it's mark-eitel here, and I am going to interrupt this commercial break to ask you for a favor. If you've got any friends or family or coworkers who are talking about buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me and my team. You can simply share the link, Mr. Mortgage Radio. That's MrMortgageRadio.com. I'd welcome the opportunity to help them any way we can. Now sit tight. On the other side of this break, we'll be back with the show. Again, it's mark-eitel, NMLS 1929005.